open the forum for a more constructive discussion towards how MCX plays a role in the zinc and base metal segment and how we can be a contributor to the same. Thank you.
Thank you so much. Over to Mr. Jain for your presentation on nickel, please.
Can I have the presentation? Yeah. So good afternoon, everyone. Since morning, we've spoken about different metals, being aluminium, copper, zinc, lead, all of the metals which has good sort of a demand. And I would say there's already established markets, established things. So I would want to take some time for one of the different metal for which we welcome the step from MCX as well to restart the trading on the MCX for nickel. So nickel is among the critical minerals. Can I go to the next slide? So as spoken by SEBI chairman in the morning, yes, nickel has been one of the 24 critical minerals designated by the government of India in January this year under National Critical Mineral Mission. Fortunately or unfortunately, we see nickel is one of the out of those 24 critical minerals, the import bill of nickel is the highest. When we talk about nickel's current import bill, it's close to $2 billion for the country, and approximately 40% share is there of this particular mineral. 95 to 96% of the overall nickel is being imported, and that's the story. And similar to what is there for the copper, we don't have that much reserves as of now for nickel, and those which are there as well will take some time, another 5 to 7 years to come into the picture. So yes, we are heavily import reliant on nickel as an industry. Why nickel is important for the strategic lever for the country, we need to understand, as it was mentioned in the AV as well, that it is one of the key component in the infra, in the stainless steel sector. And talk of the town today, EV. Electric vehicle has a major component of nickel, particularly for the long range electric vehicle. Nickel is the most important component. There's a salt nickel sulfate, which is the most important component of those batteries. So in overall, the growth story, nickel fits into the picture in terms of stainless steel as a end user industry or EV as an end user industry. Can you go to the next slide, please? So this is how the India is poised right now. We have a demand of close to 88 KT, again a smaller market if I compare to copper, zinc and other metals. But this 88 KT, if I see, it's divided into two parts, class 1 nickel and the class 2 nickel. And class 1 nickel is the pure finished goods, 99.98% nickel, and the EV material nickel sulfate is there. Again, import reliant as of now, but if we really want to go ahead and make India Atmanirbhar Bharat in terms of all the base metals, we have to see how to create an ecosystem in the value chain for this particular metal as well, which is part of the growth story of India. Can you go to the next one? So that's how the global scenario looks like for nickel. Right now, with the concentration of this critical mineral with country called China, Chinese investment backed in Indonesia, controls 70% of the overall supply of the world. And they are rapidly increasing in the last 3 to 4 years. And that led to a lot of volatility in the nickel, which has always been a volatile material, but last 3 years has been pretty difficult for this industry in terms of the very much oversupply from a specific set of country who are using it for their self-consumption and actually filling up the LME warehouses and leading to the lower prices. So if we see that this oversupply is going to continue till 2030, and post that once the supply would start reducing and the demand would overpower the supply, then there would be a story which needs to be actually hedged right now, I would say. We need to take the actions as a country, definitely. And probably MCX or any Indian benchmark is going to be the critical portion of that particular growth story, because we need a pricing mechanism and pricing benchmark within the country. If we go to the next slide, this is a sort of a scenario where the LME prices has gone up and down. LME, MCX also delists nickel at the time it touches 1 lakh over the LME prices, and that has been the scenario that nickel has been on and off. The chart automatically shows that it goes up. In a day, it goes down by $1,000, $500. It's very, very common for nickel. So the volatility is very huge on the LME, and as we were discussing in the previous panel discussions on the pricing on the SMM on the SHFE, if we see that China has made that particular benchmark for their domestic purposes, and they are actually dealing only on SHFE. They are not dealing via LME, and that's one of the thing which we also need to see as an Indian country, that where we can add on the pricing benchmark, and the LME can be definitely replaced. I would not say replaced, but can be substituted with some Indian benchmarks. So that's the need of the hour, I would say. It's a first step with the listing of nickel contracts on the MCX, and we are going to we're very hopeful that it will be a very, very good step and going to contribute to the India's growth story. So that's all from my side. We can start on the panel discussion here.
Thank you, Mr. Jain. Thank you so much. As everybody is aware that a month back we launched our revised nickel contract with differential trading and delivery unit, with trading unit being 250 kgs and delivery being 1.5 ton. This is more to do so with attracting the small hedgers, the SMEs and small corporates, right? So my question to Mudit, you run commodity-based AIF, right? What benefits do you see as an AIF venturing into exchange-traded commodity derivatives?
So, thank you for having us. Thank you, Somesh, and thank you, the MCX and the regulators. So I think before I answer that question, I'll try and give you a small perspective of how the investment management and the asset management industry works globally, and try and draw some parallels to that in India. If you kind of look at the total global asset management industry, you can classify that into what you call as traditional investments and alternative investments. Alternative investments globally are about 15% of that pool today, and they've been gradually growing over the last 10 years or so. Now, when you kind of compare that global number to India, we are probably half of that in terms of relative allocation. That means out of the total investable surplus that exists in the country, about 6 to 8% is what, as per our estimates, are into what you call as alternative assets. And when you kind of trickle that down and you kind of think about, where does commodities as an asset class lie, that's only about 2%. That is serious under allocation when you think about it from a commodity perspective. Which also says that there is a fair amount of what we call as concentration bias that exists in our minds as investors into traditional asset classes. And I think that is where AIFs come in and will play a critical role in terms of revolutionizing the industry and investments in this space. When you think about it, commodities are extremely important when you think about it from an asset allocation perspective for 2 or 3 reasons. A, they diversify the portfolio. B, they also mitigate risks. And C, most importantly, they basically provide a hedge against inflation. Now, when you add these 3 things up, you need investment vehicles for investors to participate in the space. And I think that is where AIFs, mutual funds, come in as vehicles where professionals are managing capital for institutions, for retail individual investors, as well as institutions over a period of time, which provide that vehicle to generate steady state, good quality, diversified risk returns. So when you think about AIFs and you think about investment management, I think AIFs will play a critical role to facilitate penetration of commodities as an asset class in the country over the next multiple years?
Thanks. But there are follow-up questions, if you don't mind. Recently, SIF have been permitted as well. Right, the small SIFs have been permitted as well. Do you feel there is a lot of scope on those people also to get onboarded for commodities on exchange?
Multiple, I would say, limbs to your question. Let me try and again split that up into 2 or 3 parts. I think for professionals who come and participate in the space, for AIFs, SIFs, AIFs, I think there are 2 or 3 key elements which are very critical. I'll just touch upon one of those. And one of those most critical elements are ability to provide scale. And I think over a period of time, will SIFs, mutual funds and AIFs become increasingly more important? Yes, the short answer is yes. But I think the vehicle and the ability to absorb more capital and deploy that capital in this universe is super critical for these institutions to kind of have. And I think today that is a part limiting factor. So things like some of our earlier panelists mentioned, some of those restrictions have to be relooked at because they've not been relooked at over the last decade or so. So again, the short answer is yes, but I think there are roadblocks along the way which need to kind of get solved as we move along.
Great. Thanks. Rohitji, in previous session as well, they were talking about importance of copper in EV, aluminum as well in EV, zinc and nickel put together in the stainless steel industry. You represent manufacturing side. How do you foresee MCX-based metal contracts for manufacturing people in India to make use of?
So I'll just throw a few numbers in terms of infrastructure, which Nalin mentioned about. So just to tell you that 140 airports are operational currently, and we will have 220 airports very soon operational. So that is the kind of infrastructure is being built. Same is with railways. Road infrastructure is the largest in the country, and most of it is using metals. And we, Zetwerk being a participant in that infrastructure story of India, we realize more metal consumption. However, the irony is whatever base metals being consumed in the country are produced in the country, bought in INR but hedged in dollar and FX. You have to separately hedge dollar and separately hedge the commodity. So definitely we in Zetwerk are using MCX actively. However, the constraint remains we are able to use only the near month contract. While there is a lot has been discussed in the previous panel discussions about liquidity for future months, with more active participation of funds and alternate investment options that Mudit mentioned, there's a huge gap. And if you see the liquidity internationally is majorly because of large fund participation. So, and on top of it, the other aspect is the contracts have to be friendly in terms of usage, not in, and there has to be some consistent in the contracts in terms of size and delivery. There has been a lot of volatility in the contract of MCX that we have seen in last 5 to 7 years. So with more stability of contract and better delivery options, we see more of usage of MCX.
Thank you. Vikas, you have spent a lot of time on corporate onboarding for base metals hedging on MCX. Can you share some experience on that?
Thanks, Somesh, and having me here on the panel. Having on the last panel has a disadvantage that most of the idea which you are going to discuss has already been discussed in some or the other way.
You can repeat it, that's fine.
Yeah, so I mean, obviously it will be repeated. So before, I come to your point, the challenges faced by the corporates, I think one common point which is coming from this discussion, from today's event is we actually need the Atmanirbharta in commodity hedging. I mean, any physical player who has talked about it, including Mr. Chadda, that everyone hedges on the LME. So I think it's high time for us. We have exchange, we have the regulators that we have to talk about Atmanirbharta in commodity hedging the way we are talking about in defense or EV or renewables. Because this might be my conspiracy theory, But why it is important to have this Atmanirbharta here? I'll just give one or two examples here, because in this fast changing, global geopolitical scenario, we have come across cases where suddenly US exchanges have come and said that, Chinese companies cannot get listed on US exchanges. And if some of us can recollect that nickel case which happened on LME, after some time the prices were revised. So I'm saying maybe these are very few and far instances, but yes, we cannot completely keep it out of our thought process when we are looking at developing the commodity hedging here in India. So I say Atmanirbharta in commodity hedging has to be made more vocal about it. Now coming to your point that what are the challenges faced by the corporates? Obviously one is the liquidity, which everyone has talked about it, and probably if I get a chance I can break it down. So liquidity is major challenge when we go and meet any corporates. Second is the cost of transaction. Obviously, when a corporate looks, because commodity is a very thin margin business, and when people want to understand what would be the cost, obviously their commodity transaction tax and stamp duty becomes a major hindrance, because when they look at the overall cost, it comes out to be way higher. And third is the collateral cost, margin cost. Now, we may say that today a corporate can give margin in the 4 or 5 forms, right from cash to stocks to mutual funds to government securities. And one, Mr. Surana in his presentation also touched upon the bank guarantee. To my understanding, from the corporate perspective, obviously in LME, brokers are allowed to take the credit, can provide the credit limit to the corporates. I don't know whether it can be feasible here in India. But obviously one area which can be looked at is the easing the norms for BG. I mean, before December 23, it was much easier for brokers to extend the bank guarantee to the MSMEs and other corporates. But in 23 December, I think the norms were changed where it was mandate that a corporate who wants to give BG has to have 1,000 crore net worth, and the broker has to provide it from its net worth. So probably that almost kind of, killed the BG as an option towards the collateral. So if I have to put it in a nutshell, there are 3 major challenges which we face. One is the liquidity. I can discuss more on this at a later stage. Cost of transaction, where we have to look at the statutory costs, CTT, stamp duty, because we have to understand commodity is a hedging product. And if I just want to bring this analogy, in currency, when it was, when the stamp duty was harmonized across the country, the stamp duty was kept only at 10 rupees and there was no CTT or STT. So similarly, if in case we want to kind of bring in more real participants on exchange platform, we have to look at these other statutory costs as well, whether it is becoming a hindrance. Thanks.
Thanks, because that was quite in-depth. My question to you, Arnav, that nickel is our first contract which is expiring today, and we have rationalized our delivery centers. We've made only one single delivery center, which is Thane, Maharashtra. And also the tender period for base metal contracts have been modified from 5 days to last 3 days. How do you perceive these changes are going to help market participants?
See, metal contracts on MCX have a long history, but since 2019, all the base metal contracts, they were made compulsory delivery contracts. So with a very noble objective, what we did is we spread across the delivery centers across north, south, east and west, and of course for aluminum in Raipur. And we thought that seller and buyers, they will have a convenience saying that sellers will come to the nearest delivery center for delivering the goods, and buyers will take the delivery from the warehouse which is nearest to them. And that was for a perspective of reducing the cost to both of them. But progressively what happened, during the delivery settlement process, what we noticed is there is an amount of uncertainty coming up for the buyer, that from where the delivery will come. Because in our process, what happens, the seller gives the intention and there is an auto delivery marking to the open positions of buyers. So that can come from anywhere where the goods are actually in the demat account of the seller. So that can be from north, that can be from south. If the delivery center for that particular commodity is across all the 4 centers across the country. So this learning actually what we got from the past experience of 4-5 years has made us to work upon like what is the best possible combination of the contract as far as the delivery centers are concerned. Like for nickel, we got the delivery earlier only in the west, which is in Thane. So we have rationalized it to Thane itself, and similarly for copper also it is Thane. So likewise, we have rationalized the delivery centers, again coming back to either one or little bit higher than one. Okay, so that's the case, yeah.
So I think so with the rationalization of delivery centers and the issue of what Vikas said about liquidity, I think so to some extent with rationalizing these centers would help generate more liquidity, as there will be guarantee of delivery from one single delivery center. So I believe being last session, the time is running fast. So one wish list or one point from your side, what you wish that, you know, for market participants to know, for MCX to work upon, what do you feel it would be, each one of you?
So a lot has been talked about. Just summing up what has been said before, constraint of delivery center, confusion regarding delivery centers, more stability of contract, then sorting out the GST matter and bringing in more liquidity.
Thanks. Mudit?
In a nutshell, I would say 2 things, policy clarity and ecosystem development. Policy clarity both in terms of, the BI standards, contracts are not moved around, policy clarity in terms of, what are the exposure limits that AIFs can take in this space, single commodity exposure caps be relooked at, margin limits be relooked at, open interest limits be relooked at. I think all of those pieces are in my head under the policy clarity bucket, which will eventually allow us to go to scale. And I think the second piece is what you call as ecosystem development, is ensuring more and more what we call as commercials and non-commercials to participate in the space. I think we have a very, very robust system or an ecosystem of the commercials to physically trade in the, across metals in the country, but try and kind of, push some of those commercials to come and participate more actively on the exchange, which in turn will allow institutions such as ours to, be a lot more active because liquidity by default will start moving up.
Thanks. Vikas?
I will just extend upon my point on liquidity because I think this has been the most talked about topic. So while SEBI chairman also in his speech today talked about FPIs being allowed in the deliverable commodities. So extending on the same, I think once the FPIs are allowed in the deliverable commodities, along with that, I think 2 more things are required. One will be the block trade facility. Most of the global exchanges in institutional products, they allow the block trade facility. So if in case, say tomorrow a producer wants to hedge in 3 months or 6 months, who are going to be the counterparties? If in case you look at the global exchanges, they have a well-defined mechanism for this. If in case when this is being discussed and we can kind of bring this block trade facility in commodities, it will be really helpful. And second is, along with the FPIs, I think it will be equally important to have the global trading houses, because at the end of the day, they are the one who will be taking the risk. Hedgers are going to offtake the risk, offload the risk, and somebody has to take that. Obviously, it cannot be done by the retail or mutual funds. So we have to have players like Glencore or maybe Mercuria or Trafigura, the global companies to be also active in India, and for that, the KYC norms have to be looked at it, because today when an Indian corporate has to come on MCX or any other exchange, the kind of KYC requirement which is there is quite cumbersome. Whereas if at the same time when they have to do it on LME, it is far more easier. I'm not saying that to compromise on the basic KYC, but we have to look at it, because in the last 7-8 years, whatever has happened, it has happened on the retail side. Second point is, today in metals, we have the limits in the near month position limit. So I'll just give one example. Say if in case in copper, we have the limit as 8,000 tons. The actual is 7,000 tons. today, a client who is having a position of 8,000 tons, we know that the liquidity is not that high or the open interest is not high in the base metals. He can keep the position or carry the position until the 1 day prior to the tender period. In agri commodities, we have mechanism where the client has to forcibly or necessarily roll over the position to the next month. My here simple point is, if in case we can look at this point, probably we can ensure that the liquidity in the second month also improves, and once it happens, probably people, the prop people and the HFT guys can start looking at doing some of the calendar spreads trade which doesn't happen. So this is my second idea, which probably I think can help us on improving the liquidity in the second month if we restrict that, if we force that a real user can only keep 25% of the client position in the near month.
Thanks. Mudit, you want to add something?
I think I just want to add one small point to what Vikas mentioned, and I think as a part of the KYC process, we need to relook at the risk of GST on deliveries. I know you guys are already working on it. I know it has been said, by a few of the earlier panelists, but I think I cannot emphasize that enough. You guys have to solve for it.
I think so. You're aware that we are working on it. Yeah. One point.
Hello. So